Good day, everyone. Welcome to Free Data. Today we'll be talking about profitability. As a business owner, how do you measure your profit? Also, as an employee, how do you measure your profit? So a lot of people, what they just do is they will do the money they make, that's sales minus their expenses, whatever they have, they call that as profit. Why this is not wrong, but that's just basically one way of measuring profit. In this video, I'm going to show you 5 different ways of looking at profit and what each profitability measure is telling you about. You can do this as a business, you can do this as an employee. So we're using two companies as an illustration. The first company is going to be Tesla. Tesla by that's the company managed by Elon Musk. Then next company is going to be Ford Motors, right? After that, we move to see how employees can also be able to measure their profit. Stick with me and let's go. So for Tesla, we'll be going to Yahoo Finance to get their figures. Go to Yahoo Finance. You click their financials. From their financials, you can see their results. So their revenue, cost of revenue, gross profit, right? If you want to look at their balance sheet, you also click here to go to their balance sheet. But what will be concerning ourselves with profitability ratio? The first one is gross profit margin. Gross profit margin is just basically the sales minus the cost of sales. That's where most businesses stop, right? Then we have operating profit margin. Basically, cost of sales are those direct costs that are involved. So imagine that you sell cars, right? When you buy a car, that's the cost you bought that car is your cost of sales. Then amount you sell it is your revenue. So when you do that revenue minus the cost of sales, you have your gross profit. Now, operating profit. The other expenses associated with maybe selling cars, you have marketing, you have pay electricity bills, right? All other costs will come under operating costs. So if you subtract what is remaining from gross profit from, if you subtract operating costs from that, you have operating profit. Then net profit is when you remove all your costs, you remove taxes, you remove interest expense, whatever is remaining is your net profit. Now return on assets. Before we get there, now if you observe carefully, notice that what I explained was gross profit, not gross profit margin. Now you want to know what percentage of the money that am I able to keep as profit versus percentage of money that I earn. So here for Ford Motors, let's go to Tesla. For Tesla, gross profit is basically your gross profit, that's gross profit margin, is basically your gross profit divided by your total revenue. Now, if you can see that Tesla in 2021 was only able to keep 25% of the money it made from sales. So I drag this. And if you look at this, so this 2019, 2020, 2021, you can see that the figure is improved, the percentage is increasing. Also for operating profits, do the same thing. Operating income divided by total revenue. Why their gross profit margin increased, the operating profit did not, it went down. Now the net profit margin, basically net income, you can see that also their net income improved. Now, say business, you may be a business owner and you're wondering, how do I get these figures? Basically, the only way of getting these figures is by keeping your accounting records, keeping your financial books, and that way you can be able to generate these records. If you are struggling and you don't have this kind of records, you can reach out to us at Feed Data. We'll help you set up your accounting process so that you can be able to capture these figures and be able to do this kind of analysis on your financials. So let's move forward. Return on assets. Now, I assume a lot of us know what an asset is. It's basically those productive materials that you use that enable you to do what you do, right? It may be a building, it may be a maybe land, maybe machines, right? So the profit you're able to make, what percentage of it is it compared to assets? So this return on assets is just trying to find out how well are you sweating your assets. Are you just park the assets there and they're idle and they're not being put to use? So let's do that for Tesla. It will now be net income divided by the total assets. You could see that this number has gone up for Tesla, which is what we want to see. Now, return on equity. Before you start a business, you have to get people to invest in you. Either you invest in yourself from savings, you meet people that believe in you, they put money there, right? Of all those money those people put, what returns are they getting? You do net income divided by total equity. You can see from making a loss of 13% on equity invested in 2019, as of 2021, Tesla equity holders were able to return this investment was able to return 18% for them, which is quite impressive. Now, return on invested capital. There are basically two ways to invest in a business. Either you put in equity or you put in debt. So if you put in debt, that means you borrow the company money. There are also people that are businesses that borrow money to institutions. So those investors, you also want to know how much return did both equity investors and debt investor when you put them together, how much returns were they able to make, right? So it will be net income divided by total invested capital. So you can see that that's improved, right? Now let's go to Ford Motors. So Ford Motors, I'm going to be a bit fast since I've explained the concepts. Uh, so basically, these are the figures for Ford Motors. Right now, you can compare these two figures for Tesla. So why for equity holders, Ford is making 10%, Tesla is making 18%. So basically, you can also compare two different companies. So see the good thing with this is, I imagine you have two businesses. You can easily check, okay, this is how this business is performing versus how this business is also performing, right? And you can now decide, okay, how do I share my time between these two businesses, right? So it's very important to do this. It's very important to look at profitability as a who have a holistic view that will enable to see how your business is performing. Now let's go to an employee. Imagine you're an employee. Basically, how you make money is by salary. So let's look at someone that earns 300,000 naira a month. Now, what are direct costs? Of course, you have to go to work, right? Your transportation costs. Let's say you work from home, your electricity, right? So all those direct costs that if you must do your work, you have to spend this money, right? Those will be your direct costs. So let's assume that this employee spends 70,000 naira. Now the gross profit will be 230,000 naira. Now operating profit. Of course, you have to run your house, right? You pay electricity bills, you pay rent, you have dependents, you give to your church, give to your charity, all those. So let's say this person spends 160,000 naira as operating cost. So the operating profit will be the gross profit subtracted by now the profit will now be so the employee will have paid his taxes before he or she gets the 300,000 because your taxes be so it's being deducted from source, unlike a business where you spend your money expenses before the taxes have been deducted. Now assets, let's say you to do your work you need a car, right? You need You need a laptop, you need basically things that will help you to be productive as an employee, right? So let's say this person, everything is 3 million. Now, equity, before you move to a work, what I said that before I said this work, um, what investment did I have to make? The investment may have been you had to get a new apartment, maybe this, let's say, imagine this employee is not in Nigeria, maybe you had to liquidate all your assets, and now had to move that money to a different country. Maybe you had to take further studies in order to get this job, have these certifications. Those will be your equity. Let's say this person invested 1.9 million. Now, invested capital, you know this saying that it takes a community to raise a child, right? Let's say for invested capital, your spouse, if you're married, invested money, family, people you took loan from some people to be able to make that switch, right? So let's say it's 110, 1.1 million. Same way for a business, you can also make this analysis for yourself as an employee. So your gross profit is going to be your same way, operating profit, net profit margin. So your profit is also this. Now return on assets is what you are returning, return on equity. So as an employee, don't just look at salary. This job is paying so amount. It's very important to make this analysis, right? Look at your gross profit, look at your net profit. Also look at the returns, right? Because every job has returns, right? So this is how to look at profitability as a business and also as an employee. Please like, comment, and share. And I really appreciate if you subscribe to our channel. This will help us and give us the encouragement to keep producing video. Thank you. See you next week. Bye.